Mhm.
Well, then that means we're passing that on to the investor. There's zero profit margin for us in that. This is a big mantra for us, is being able to offer below market pricing to our clients, because traditionally turnkey, people say that there's not equity. Well, in this scenario, there is. So if there's 10% on a 300K house, that's $30,000 that the investor gets to take as a price reduction. Or Derek, the way that we do it is they can get $30,000 back at closing. They can use that $30,000 to buy down their interest rate into the threes at this point.
I would like to take a 10-minute break and then three, two, one. How do you have the ability to analyze stocks? Welcome to the Generations of Wealth podcast. I'm your host, Derek Dombeck. Today's show with Zach Lemaster is interesting. It's different than what I thought it was going to be, quite honestly, when I agreed to have Zach on the show, because it's all about turnkey investments. And I have talked to and looked into operators of these types of companies, and I really, really liked Zach's angle on it and how he's getting the inventory that he's offering up to his investors. So before I bring Zach on, just wanted to thank you for being here, first and foremost. Following the Generations of Wealth podcast, we are, we're into this for over 2 years now, and now it's just becoming such a regular thing, and that I'm passionate about. And part of that is I love the relationships. So if there's something I can do to help you, please don't hesitate. I can't tell you how to measure return on investment when it comes to relationships, because there's no way of measuring it. But I've met some incredible people through doing this show. So please go to derekdombeck.com. There's a spot on there where you can book a call with me, and for a couple different reasons. Very self-explanatory. So do that. Let's connect. So derekdombeck.com. That being said, let's bring on our guest. And without any further ado, here he is, Mr. Zach Lemaster. Zach, thanks so much for being on Generations of Wealth show.
Derek, it's absolutely a pleasure. Appreciate you having me on.
Absolutely. Well, Zach, we were chatting a little bit before we started the show, and we're doing a nice early morning start of the day show. You're out in Denver, and we're starting our day off right. But why don't you tell the audience a little bit about yourself?
Yeah, absolutely. So, again, my name's Zach Lemaster. I'm the founder and owner of Rent to Retirement. We're at this point the nation's largest turnkey investment company, which basically means we find areas throughout the country where we see optimistic investment opportunity, and then we set up our local teams there to build new construction, single family or small multifamily homes. We lease and manage them and then sell them to our investors as a package. So our investors get the opportunity to own in markets where the numbers make sense, but they don't have to handle the physical management. So I started this business probably about 11 or 12 years ago. Prior to that, I was an optometrist. That's where I met my wife in school. So we were both optometrists. I had a background in healthcare. And then I was also an Air Force captain for multiple years as I was on scholarships. So I had different career paths leading into real estate. But ultimately, real estate was always a side hustle for me. It was something that I was interested in. I liked the idea of a tangible asset. Of course, I went down the rabbit hole of that many people do, reading the what we call the Purple Bible with the Robert Kiyosaki books and all the other things. I see some good ones on your shelf as well. But yeah, so that is kind of the journey for me, and here we are operating our business today. We work in 18 different markets. We do about 600 to 800 doors a month and help thousands of investors build passive income investing in the best markets throughout the country. So that's about as quick and dirty as I can give you, Derek.
Well, that's the show, everybody. I guess we'll call it a wrap. Zach, I got so many questions. When you started out, I'm going to make the assumption you didn't start out in new construction building subdivisions, right? Like what was the beginning for you as you were an optometrist and getting into real estate?
Yeah, the first house I bought, and this is going back probably 15, 16 years or longer at this point, but the first house I bought was a duplex. This is also my very first house in general.
Hmm.
This is just coming out of optometry school. I didn't have any money. I did, as I mentioned, I was on scholarship with the Air Force, so I did have access to the VA loan. So that was a big benefit for me, which means you can put no money down to buy a house. You still have to, qualify for the income portion of it, and there's no PMI. So I was able to buy my first house hacked it, a duplex, lived in half of it, rented out the other half. And that really kind of solidified the idea of real estate investing for me. And then the next year, I bought another duplex, and then we did some other single family, and that was local. I was stationed in North Dakota at the time, and that was really the beginning of investing. But I soon found that investing locally, Derek, while it seemed safer or just easier because I knew the market. Like we didn't want to own this huge portfolio in North Dakota, especially because in the military you move every 3 to 4 years typically. So we started to look out of state and focus on markets that have better investment opportunity, better upside, better cash flow. But we didn't know how to go about that, right? So that was really the foundation of our company. Like, hey, we want to invest in markets. We want to be intentional around where the numbers make most sense. That's what the smartest investors do. And then, how do we do that? How do we research markets? How do we build our teams in those areas? And that was, work in progress. So really, that's the story of how I started investing in real estate, but also how Rent to Retirement was founded. Was really just out of necessity for my wife and I to build our own portfolio.
Right, because we'll get into the model of funding and everything else and what your investors get and what you guys get. But what part of North Dakota, where were you stationed?
I was in Grand Forks, so
Okay.
all the way north, right next to the Canadian border. Yeah.
Okay. And for those that are listening that don't have a clue, the population in that area, Grand Forks, is what?
Oh man, it's small. I mean, I'd have to look, but I'm guessing, 30, 40,000 for it is a college town. I mean, the base is outside of the town.
Yeah.
But these are semi-rural areas, right? It's not a huge area.
And the reason I bring it up, I spent a lot of time in North Dakota, and it's hard to build a business or a portfolio when you're in a town of 30,000 people, and there's nothing for a couple hours to the next town of maybe 5,000 to 10,000, or in North Dakota, just it's sparse. So I
And I would
get
say
it,
this
you know,
too. There's also people that live in really highly populated metro areas that it also doesn't make sense, right? Because
right,
the taxes are too high, the real estate is too high, like it doesn't cash flow. So it doesn't have to be a small location. But yeah, I would encourage people to just be conscious about looking locally in general and if that makes sense to begin with.
right. And that's the opposite of what a lot of people are told, right? A lot of people are told, well, start in your local area, which you did. I mean, you bought some properties there, but I like that you had the vision of expanding and going, obviously wherever the Air Force was going to take you, you had that already planned. So, next question. Talk about finding locations. So, what did you do in the beginning? Because as you said, you had to figure it out as you went. What was your next location and how did you pick that?
Yeah, it was. I wish I had a more intentional story around this, but it was. It was basically we were just going to different conferences, real estate conferences, and networks, and meeting with different people. And we met a guy that did. He was in Chicago and he did some rehabs, and he was just talking about the numbers. And of course, he was selling properties, and we ended up buying some of those, and they ended up being terrible because they were in really low income areas and
Mhm.
they were terrible at managing them, and they were Section 8. Not that you can't be successful with Section 8, but like you need a specific business model for that. And so in those, we lost money on all those investments, even though on paper they looked very attractive. And so we very quickly learned that we want to, yeah, be more intentional around how we choose an area. We want to be in better class locations and kind of creating, I mean, through trial and error, building our criteria, our buy box of what makes for a viable investment. And some of those things that we still use today are all right, we want to be in areas that have a diversity of industries. We don't want to be in an area that's just to say reliant on oil or gas that can go boom bust. We want to be in areas that are landlord friendly, that also have, favorable tax structures. These are all really important things that are growing in population, that have an undersupply of housing. So, we really kind of have a buy box now. But in the very beginning, yeah, I mean, it's hard. It's daunting when you're saying, hey, I want to invest out of state. I want to try to find better investment opportunities in my local market. But then it's like, okay, where do you go from there, right? But the truth is, there's a lot of good markets out there, and you really got to be, I think, thoughtful around what your goals are, um, and then try to find a market that matches your goals. That's how I would approach it because there's a lot of good markets for different reasons.
Yeah, for sure. And a lot of people that are trying to do turnkey, um, that I've talked to in the past are buying existing houses and rehabbing and then turnkey, right? You're doing all new construction at this point. Is that correct?
Oh, that's about 80%. We still do have some of the renovated homes, and those are traditionally more in the Midwest. Those are more of like I would say like a cash flow play for people because they're cheaper houses like 150,000, 200K. But a big focus of our model is focusing on new construction, Derek. And I'd love to dive in the why behind that and the numbers. But yes,
Please
they're
do.
just
Yeah.
there's so sure. I mean, and you kind of asked this question early on too, is like, you didn't start new construction and that's true. But yeah, we learned all the lessons the hard way because new construction is, or, rehabbed homes is challenging. Even if you have a, 1950s house that you completely renovate, there's still going to be things that you need to update on it. Like new construction, you're building in areas that are growing. You have a higher upside in terms of rent growth and appreciation. You attract the best quality tenants. You have builder warranties on everything, so there's very low maintenance. The challenges are usually more expensive, right? So relative to that $150,000 Midwest house that's renovated, a new construction average pricing is 300K. The additional benefit that we bring available to our investor community is doing it at scale. And so and I'll get a little deep into this, but just stay with me. So our business model, we're very unique in this. This is our niche is that we operate in two ways in new construction. One, we are builders and we do build homes, but that's a small portion of the inventory that we actually have available. The second piece, which is a more important, is because we have a large community of over 1.5 million investors across the world, really at this point, we can go to all the national builders here across the country and say, hey, just like an institutional buyer would, like BlackRock or something would come in and buy in bulk, we can do the same thing with these institutional buyers. And because of that, we can get discounted price points, significantly discounted price points that we can then pass on to the investor. And these are significant. So to use and this is probably our biggest value add to clients today, is not just selling them a house that's fully managed for them and newly built in a great market that's going to outperform their local market, but being able to have a unique buying opportunity. So let's say a $300,000 house, we get a wholesale price on it at say 10% below market value.
Mhm.
Well, then that means we're passing that on to the investor. There's zero profit margin for us in that. This is a big mantra for us, is being able to offer below market pricing to our clients, because traditionally turnkey, people say that there's not equity. Well, in this scenario, there is. So if there's 10% on a 300K house, that's $30,000 that the investor gets to take as a price reduction. Or Derek, the way that we do it is they can get $30,000 back at closing. They can use that $30,000 to buy down their interest rate into the threes at this point.
Well, enough people have been inquiring, and I'm going to make this super simple on all of you that are listening to the show. If you have any desire to work with me, whether that is a transaction that you're working on that you need help structuring, if you'd like to buy a deal that I have for sale, if you would like to sell me something, whether it's real estate or a business, happy to talk with you. Or if you want to be a financial partner in one of our real estate transactions, simply go to derekdombeck.com. On the homepage, there will be a tab and there will be a web form for you to fill out. Check the boxes that make the most sense for what you want to do, and you will get directed to schedule a call with me, and let's have a conversation. Let's see what we can do to work together. So look forward to hearing from you, no matter what it is that I can help you with. Again, go to derekdombeck.com, fill out the web form, schedule a call, and I will talk to you soon.
Or they can use a combination of that. So if you're putting 20% down on that 300K house, that's 60K down. If you get 30K back, half of your down payment back, that skyrockets your ROI. It allows you to potentially buy two houses for the same amount of capital you traditionally buy one and still have equity in those houses. So it really allows you, especially in today's market where we still have high interest rates, it allows the investor to structure some really unique deals to still make the numbers make sense and still make real estate make sense when the average deal does not. So I know that was a kind of a long rant, but I wanted to go through that.
No, I appreciate that, and we'll actually pick that apart a little bit more because you had said something about the number of investors that you have, and it's worldwide. Um, it sounds like you've grown quite a community. What does that look like? Like how's the funding on the front end? Are you not building until you have basically all these houses pre-sold or
No,
contract?
everything's already built and completed. If you recall, I said that we're building less than 10% or a small portion of our inventory. So in that capacity, we operate as a normal builder.
Okay.
And we do sell some retail, but normally we're doing build to rent. Like we're focusing on building in areas that rent well. But the larger portion of the new construction homes, the 90% that is available to our community, they're also already built homes. So some you'd buy them just like a normal process, right? You identify the house, you go through lending. Of course, we have lenders that have pre-negotiated rates for you, or you can use your own. So you buy a house and you close on it 30, 45 days, go through inspection, appraisal, the normal process. But because the house is, we get to go to these builders. These are like Toll Brothers, Lennar, Century,
Okay.
LGI, all across the country, and they have thousands of homes available, and we get to cherry pick the best deals across the country. We get access to their entire inventory, and then we package them together. And so, of course, we have funding sources for that. So,
That makes more sense. So you're not necessarily going and developing out a subdivision. You're picking from other builders what they've already done and kind of taking their excess inventory and getting it discounted because of volume pricing. Is that closer?
That's correct. Yeah. And then even the stuff we do build internally, it's not subdivision development. It's more infill.
Hmm.
Because we do like one of our targets is we want to be in areas where you have over 60% homeowners in those areas. So these are not like build to rent communities where it's full of rentals. These are typically communities where it's vast majority is homeowners mixed in with a few rentals. That's where you see the best, I think, returns and opportunity.
I agree because now you're getting the tenant that has the mentality of I'm living in a community that's not changing every 12 months, right? They're living in a community that's mostly homeowners or majority homeowners. And
Absolutely.
yeah, I think everybody listening to this show that's ever been a landlord, there's a big difference in those neighborhood communities and how people keep up their properties and how things look. And I mean, that's just reality. It's
Yeah.
profiling, but it's profiling for a reason because it
Well,
works.
it's just reality. Yeah,
Yeah.
there's different neighborhood classes for different reasons, and we specifically focus on A and B class neighborhoods. I mean, it's a balancing act, right? Like we
Mhm.
want to be in areas where the numbers make sense. These are not $1 million luxury homes. These are affordable housing. We try to be below the median house price point because that's where the highest demand is. So median house price point fluctuates, but it's plus or minus 400K. Typically, we want to be in population growth areas, so we're typically in the Sun Belt. We do operate in the Midwest as well, and there's great opportunity there. But we want to be where people are moving, where jobs are being created, where
Mhm.
people need housing, right? Like a lot of it comes down to just supply and demand.
Oh, for sure. For sure. So so for the people that are buying it, um, I guess give me the high level. If I was coming to you, Zach, and I was interested in buying a house, what does that look like? What's my expected IRR, my return on investment? Give me the
Well,
spiel.
yeah, we can go through the typical process, Derek, but typically, I mean, the first thing we want to do is understand what your goals are. There is no one size fits all type of investment. As I mentioned previously, there's a lot of different markets that are better for different reasons. What might be the best market for me is maybe not the best for you because we just have different goals and objectives. So the first, I mean, we spend a lot of time with our investors. We have a whole team of investment strategists, which are basically going to be your guide to building out your strategic goal. And it's okay if you're brand new and you don't know anything, right? Like the majority of our investors are new to investing. Some of them have large portfolios and they just want to easily diversify in different parts of the country. But the majority of our investors are new, and they actually need some education as well about like real estate, different financing options, and tax structures. Like we love, if anyone listens to me or you get on our YouTube channel, like you'll see me just going down the rabbit hole with taxes because real estate has so many tax advantages. And that's probably been the biggest impactful thing for my wife and I to build our wealth is using real estate as a tax shelter. But um, the first thing we're going to do is spend some time with you to map out your goals, criteria. And sometimes that takes a couple weeks, sometimes that takes 2 years. I mean, it really depends. We're on this journey with you. And then, once you're ready to start looking at houses and financially able to, go through that process, and we'll walk you through, introduce you to lenders, get you pre-approved. It's a normal buying process. We identify a few markets and properties that fit your goals, help you walk through understanding those. And then, yeah, you put a property under contract, go through normal diligence, appraisals, inspections, title work, close on the property. Some of the properties are already leased, some are not. If it's not, we lease them. Make sure you get set up with your management account. And then really after you close on the property, let the dust settle. You're really, at that point, just receiving income and working with the management team. Then it's about like, what's the next step for you? Do you need a legal structure in place? Do you need to, how do you scale your portfolio? Because the goal, like we have short and long-term goals, how do we keep progressing you towards that long-term goal? And I think the biggest value add in addition to the deal structure that we make available is just like the education component of you don't know what you don't know. And often when you're first starting, like it's really important to have that kind of guidance and mentorship of saying like, all right, how do should I do a cost segregation study on my property? How do I apply that against my active income to save, 50 or $100,000 in taxes this year? Should I have it in an entity? What type should I use a DSCR loan? Like what is the best deal structure right now? There's some lenders out there that offer 5% down loan options. Traditionally, people thought that you had to put 20% down on a single family home. You don't. There's just different loan options out there. So it's going through those things, Derek. But at the end of the day, it's working with the client to make sure that we're meeting their goals and then matching them with the right inventory and being there to support them throughout the entire process. And no one retires off of just one house
No.
that I've met. So plus you want to have a diversified portfolio. So I mean, we're here to build long-term relationships and partnerships with our investors because we want them to be successful because transparently, that means they're coming back to us to buy more houses, right?
Well, absolutely. And it's a great model. I've seen, models that are turnkey that don't have a fraction of what you just described, right? I mean, there's plenty of them because most of those are not necessarily, and this isn't fair. I'm profiling as well, but most of those are not really centered on doing what's best for the investor. It's, I'm going to sell you a house and I'm going to work with you for a while, but I don't necessarily care if you ever buy another one. And I say that because, and these are not huge operators. I'm talking about people that are doing, you know, maybe 100 houses turnkey, not in the thousands. But it's kind of they gotta be looking for fresh meat all the time, right? And that's kind of like a lot of other people in the industry too, right? Wholesalers and lenders. I mean, people come and go all the time. I'll get to my next question because I'm starting to ramble about this. When you guys started out in North Dakota, you and your wife, I'm assuming that it was just the two of you. How did you decide you want to build this team, and how big is that team? Because you referenced a lot of we's in our team, and we have people for this, we have people for that. Is that a lot of VAs? Is that a lot of, subcontractors, actual employees? What does that look like?
Yeah, well, this really started and I love my wife, but she wants nothing to do with the business of real estate. So, we're partners in life and in business, but she, she's not really actively involved. Again, when we started, this was really just about when my wife and I started investing, this was about just our own future, right? Our own finances. And that's really what we did with real estate. Ultimately, this was the plan was never to build this large organization that we have today. But we soon found like, hey, as we started to be successful, it started to catch people's attention. And we had a lot of, friends and family and colleagues that were saying, "Hey, we see the success you're having. Like, can we invest with you? Can you teach us? Can like, or like, I don't want anything to do with real estate. Can I give you money? Things like this." And so we naturally saw the opportunity or the need, and the demand for this level of service, and we decided to build a company out of that. So, and as we grew it, every year we've thankfully had just growth, and there's been challenges along the way with any business, right? Especially that's any business that's been there for 10 plus years. But, I think that, well, today, to answer your question, so today we work across 18 different markets. We have a lot of our team is 1099 in these different areas. Today we don't do management. We did for a long time, but we actually partner with third party managers, and some of them are national teams that do very well in large metros, and then some of them are more hyper local. They do have to meet our criteria, and we vet them very thoroughly, and we integrate them into our business. They do have to follow our process, right? So they operate really well. And then we have our local facilitators and oversight. But our standard team, I mean, we're about 40 people today internally.
Mm.
And yes, some of those are VA based, but most of them are here where I'm at, or in some of the larger metros that we operate in. But collectively, I mean, there's thousands of people that operate under our umbrella, right? Including the local property managers. We don't include like third party lenders and different vendors in there. We have those resources available. Like if you need a real estate attorney or CPA, those would not be part of our team, but we have excellent resources for you, that you can choose from. And you can, or you don't have to use them. And you also don't have to use a property management. There are some people that want to self manage,
Mhm.
or some people that want to do short-term rentals, or some people that want to, just buy a house they live in, and get a discount on it coming through our network because of the volume discount, and because these national builders build in all markets, like, so there is that aspect as well. But yeah, it's been a journey over the years, and we've been very thankful and grateful for, the direction things have gone.
What's the biggest pain point of the business for you?
That's an evolution, depending on when we're talking. Right now, specifically, the biggest pain point is just the market. We're 4 years into this, or longer than 4 years, really, at this
Mhm.
point of when interest rates skyrocket post COVID. I think that was like March to May 2022. Things
Yeah.
started to shoot up. People thought there was going to be a real estate crash. They thought there were going to be spiking rates come down. Like we're still teetering, and of course we have war right now. There's a lot, and there's always something. I often encourage people to remind them, like, you got to turn the news off because there's always going to be something.
Hmm.
I mean, look what COVID, like, what happened after COVID. Real estate, anyone that didn't buy real estate then is kicking themselves in the butt right now because a lot of things doubled in pricing, right? And
Yeah.
then a lot of people locked in 30-year rates that we'll never see again.
Yeah.
So I mean, there's always challenges, but it just feels like right now things have just strung out longer, and there is challenges with that, right? There's the inventory somewhat stagnant, and but I mean, if you know real estate, it's a long-term game, right? And so interest rates today, you can always refinance houses in the future. Um, you just need to know how to make the deals work, and that's exactly what we're doing with the deal structures with the new construction. As I mentioned, is like being creative, and creating something new, to make a deal make sense. But at the end of the day, real estate's a long-term investment, and you're investing for it for cash flow, yes, but more importantly, we call it the ideal investment, and this is an acronym of all the ways you build wealth in real estate. So I is income, that's cash flow. D is depreciation, right? You're building depreciation over time. These are all adding to your balance sheet, your net worth over time. E is equity buildup as the tenant pays the loan down. A is appreciation. L is leverage. Like leverage is a beautiful tool when you're using it responsibly. So, I mean, you're building wealth in all those areas that compound over time.
Hmm.
And it only takes, I mean, we're not talking about building tremendous wealth overnight, but it also doesn't take a lifetime, Derek,
Right.
as you well know, if you just stay consistent and you're intentional about it. So that's the biggest challenge right now is just the market, but you got to adapt, right?
Yeah. When I look back, Zach, I started in 2003. So in 23, 24 years of business, um, had I picked up and held more assets, and there was the crash, and there was, my regular listeners know the whole story. Um, Up, down, bankrupt, the whole shit, right? But I just, from an asset standpoint, uh, if we had kept one out of every three houses we flipped, or one more out of every three houses we flipped, night and day difference, right? And as I look now, um, even starting today, I'm 50. So even if I just do that now, which is what I am doing, by the time I'm 60, 65, 70, I expect huge growth. Because I know you probably don't want to hear this, and everybody's got their own crystal ball. I don't see rates going down anytime soon, and I don't see inventory moving any faster. The average days on market in our markets and markets that I deal in with students and other people, it's it's starting to transition, and that's not a bad thing for buy and hold investors. It's a bad thing for people that need to sell their inventory. But if you don't need to sell your inventory, you're in the catbird seat.
Yeah, I agree 100%. I mean, it's just changing your philosophy. Now, we're still, I don't know, it's still weird because we're, like I said, over 4 years now since we had COVID rates, is what
Mm-hmm.
we'll call them, right?
Mm-hmm.
But people go back and they use that as a baseline. And like that's unrealistic. High rates are healthy, or
Mm-hmm.
relatively high. In fact, I won't even call these high if you look at the history of interest rates, right?
They're not.
Like they
They're
could get
average.
significantly like four times as high, right? We've seen that in the past. So, um, it is necessary, but yeah, I agree, Derek. It's having the long-term mindset, right? Because
Yep.
when we do have inflation, which we always will, and who knows with where things will go with AI, but probably it means more inflation, right? Like there's a rapid evolution of our economy and stuff like that's happening now, and it's hard to even conceptualize. But having a hard asset, if inflation goes up, home prices go up, cost of living go up. It also, the debt that we use today devalues quicker over time. So just understanding that, that's why it's important to invest your money right now. And the power of leverage, being able to, yeah, I mean, shoot, again, if you bought a 300K new construction house and you're into it for 10% down because you get 10% back, like I mean, that makes it more feasible to make the numbers make sense today, but it also gives you a step up
Mm-hmm.
and a starting point on, for owning that property, which could have taken you a few years to build that equity up as well. So it's just, yeah, you just got to change your mindset around it and think about what's the long-term goal.
Absolutely. Well, Zach, what is one question I should have asked you that I didn't? And it can be about anything.
You didn't ask me anything I like to do for fun, Derek. This has been all business, man. No, I don't.
I,
I,
I am so bad. Damn it. What do you like to do for fun, Zach?
Yeah, no, I'm an outdoorsy guy. I'm originally from Wyoming. I know you said Wisconsin, right? Is where you're at. So, I mean, probably like all the same things you guys do, hunting, fishing. We love skiing out here in Colorado, camping with I got two young kids, 3 and 5. So just spend the world with it. We love to travel. We were just in Indonesia for 3 months. Doing in Bali, we were doing a school program for the kids, and actually my wife has some family there, but those are the type of things that we get to do the majority of our time because we got a great business. Real estate's provided kind of the financial security and passive income, to be able to do that. We're also passionate about healthcare. So we're both optometrists. We have an international foundation to help people get cataract surgery across the world, which is the leading cause of blindness. And I say all that because, that's a power of investing and real estate specifically is like being able to have a bigger impact than we would otherwise. But that's our life, Derek, outside of real estate.
Well, I love that because honestly, the whole point of this show is to live your vision and love your life. It is our mantra. What you just ended up there answering that question with is your why, and to be able to use what you've grown and to help people in something you're passionate about. Then it's not work. It doesn't feel like work, right? I love that.
Absolutely. Absolutely.
Well, Zach, I really appreciate you getting up early this morning. Nobody else will actually ever know what time we recorded this show, and we're not going to let the cat out of the bag. But we'll just say we started our day with this.
There you
So
go.
appreciate you being on. For everybody else, you know, go out and do something that you enjoy and let real estate do the same thing that Zach's doing. And quite frankly, that's what I do too. It's a tool to go out and live your vision and love your life. So we'll see you on the next show.